All right, so we didn't quite make the market makers expected move, but we did close a little bit above where Vega neutral was at the end of yesterday. I'm sure Vega neutral's probably moved up a little bit. There's very obviously bulls piling into fall control into the end of the day today. But remember, this is end of quarter, and a lot of these gains can just sell off in the overnight. We saw that happen both in August. Well, from July into August, and then August into September. So these levels may not hold through the overnight session. Right now, yes, a little overextended at the top there, and already selling off a bit harder than SPX managed to do into close, losing the 67.3750 level, which is I think the prior all-time high. If I'm not, no, not quite the prior all-time high. 67.56 is the all-time high. So still not technically a full reversal off of that failure, but we do have a reversal on Monday's drop a bit here. To the downside, probably need to pay attention to just just keep paying attention to that 6,700 level where the prior week closed. I think that's going to be mostly what matters there. Um, Yields at the top end of the curve started moving up, but dollar still down a little bit today. I will say that if the government actually does shut down tomorrow, we're likely to see dollar up and then more significant steepening on the yield curve, especially with the uncertainty provided by the BLS data being removed on Friday. Right now, that data still needs to be priced in. If we do get a government shutdown tomorrow, those expectations will start to get priced out. Correlation moved down pretty hard on the 1 month, almost near its, well, fairly close to its like 4 month low. But not quite there yet. So a little bit more room. I would say that volatility in the NQ underlyings is probably about 3x what the index vol is on average right now. Um, so you at least 1 month dispersion, probably pretty over levered at this point. And I think stabilizing things at these higher price points into the shutdown is probably a good idea, especially when faced with kind of a risk off scenario following the shutdown, depending on how quickly that uncertainty is felt. Gold moving up again today, so still a lot of worry about the dollar. Um, Getting really close to testing the 3,900 level. The rest of the commodities, though, not doing so great. Most other precious metals falling, agricultural's falling, and oil continuing to take another big hit, now down to 62. So inflationary pressures there, less of a concern. 3 month correlation is falling, but it's falling against fairly steady bond volatility. I would say if we get a shutdown, that's another thing that we'll probably see is bond volatility pick back up. Leverage at the top end of the carry falling through most of the day, and also at the short end. Forward yield on volatility actually increased today, up up to negative 8.59%. So there's some out of the money put buying, and some demand for long vol. I think someone noted earlier that there was dealer longs on VIX went the longest in the last 4 years. And so probably a good idea to continue to keep an eye on that. Remember, we're watching HV10 to see when that gets up around 8 or 9, and we could start to see short dated IV become unpinned a bit. You can see here that out of the money demand for puts is continuing, so some tail risk hedging ongoing. Breadth isn't really improving, even with the move up. I would say maybe a little bit better today. But ES kind of dramatically outperforming NQ, Dow, and Russell. And I'm not entirely sure all of that was in the RSP, but some of it was. So that equal weight. pull to the upside. Fed fund futures repriced pretty hard today. Jolt's data was not in line with expectations. It was a little bit hotter, but close enough that looks like we're pricing in 3 cuts for June, back to over 2 cuts for March, and pushing a little higher, closer to 3.5 cuts for January. 10-2 steepened up 4.26%. And the correlation between VIX, cash VIX, hitting a new high, or a new low, negative 49.2%. So still a shitload of short dated vol selling going on here. We do have the VIX expiration tomorrow. That could also see some volatility unpinned, given that a lot of that interest was for the well, I guess probably more next Wednesday than this Wednesday, but this Wednesday could have some effect. And then out here, still a bit short of the all-time high test and the retest of the failed trend, but we did push up pretty strongly off of yesterday's fairly neutral close. I think locally we'd be looking at like 66.43.40 to confirm or signal a reversal off of a top here. Obviously, breakout above the all-time high, bullish, but still really looking back at that 6,600 level to confirm anything of any significance. So even if we fail the 6640, and do start dropping into that range, it's that test that matters, not so much this one. But that could be a good signal to maybe go short. Loss of 50 could also be. But I think 40 might be a bit better. And then, we got a lot of performance in electronic technology today, although that didn't seem to help out NQ very much. Financials having a horrible day. Health tech really leading the way with Trump's announcements about injecting some cronyism into his tariff demands, and promising pharmaceutical companies that lick the boot or kiss the ass that they will benefit from a tariff-free trading environment, which allows them to raise prices internationally while meeting the price demands being made currently by the U.S. government. Oil down, consumer services down, retail trade not doing so hot, utilities, producers pick back up again. So tech services actually not doing all that well. But much more than made up for by electronic tech. So I think that's about it. Tomorrow's gonna be where the decision is made. We don't have a lot of data going into it. We do have ISM manufacturing, which it is of some importance. I know we have I think we have EU inflation, which is expected to pick up a little, and I think we have ADP, maybe some S&P PMIs, but that's mostly it for tomorrow. So, a little bit of like volatility around wherever we're trading at the time the data releases come out. I don't think any of them are super important unless they miss by massive margins. And then, pretty much what's going to matter tomorrow is if the government stays open. And then, that'll tell us a lot about what's going to happen to volatility in the back half of the week. Shutdowns tonight? What, like midnight? Yeah, alright. Well, then, maybe this will just keep selling off overnight. Midnight? Oh, shit. Well, don't we have until midnight to solve it, though? We still got fucking 8 hours. Yeah. 8 hours before the market has to worry. There were literally no Republicans in the building. Whatever if they shut downs over time. China has National Day. Symbolic invasion time? Maybe. They've been getting ferries ready to go to Thailand. I don't think China will ever directly invade Taiwan. I think they're just gonna I think they're just gonna wait till like we go to war with Russia or something, and then they're just gonna be like, "Oop, look, I snatched it." I don't think there'll be even an initial shock. I think just as time goes on and that money isn't injected into the economy, and we start missing more and more data sets, and the trajectory of the economy becomes more and more uncertain, that it becomes more and more bearish. But I don't think the initial effect of a shutdown is all that bad. Probably just a good chance to squeeze out worried bears. Yeah, the bond market can tell us a lot about inflation. We're obviously we'll turn our eyes towards ISM manufacturing and ISM services. But that's it. Thank you guys so much. Have a good one. I'll catch you later.